Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss a few trades that I've done on the intraday time frame, trading Nasdaq 100. And just another preview, and we just had the first opening class for the tape reading course, and we're receiving such a great feedback from students that are just basically saying this was kind of the one of the missing pieces in our curriculum, and now we're covering it, and obviously everybody is excited about the way how it's going, and what's ahead with Gary, with David, and with William. I'm extremely grateful to all of your feedback, and I'm extremely grateful that a lot of you guys, a lot of the students are participating interactively with the exercises that we have during the class and the homework. So keep it up. And for those of you who are interested and you're still thinking, go to our website, check out all of the descriptions for each of the series that we have on tape reading. All right, well, Franz, welcome back, and let's look at some of the trades that I've just done in the last couple of days.
Hi, Ramon, let's do it.
Yeah, let me explain first the context of the trades, because this is very important, and also the context of like my trading that I'm operating from right now. So, and I must say that I'm not fully available for all of the sessions to day trade. I just don't have time, to sit there in front of the screen and to wait for each signal. So I'm in between meetings, I'm in between sessions, I'm preparing the content and so on and so forth. And I think that a lot of you guys could relate to that in terms of what is happening in your life. So you always need to think about your availability for trading, and what time frame is the best for you to trade. So my preferable time frame is swing trading. So those positions that I would be holding from like a week into months and months and months. So for instance, my usual average holding period for winning swing trades is going to be around 2 to 3 months. I do a lot of long-term campaign trades, as we've just been going up from the March 23rd lows up. So therefore, there are quite a few positions there, and I'm anxious to show you those trades, but they are not trades that have been concluded yet. So therefore, this is the material for further sessions. But intraday trades, obviously, they're available right away after the day is done. So I am happy to show you today some of the trades, but again, bear in mind that because of how busy I am, I'm not available to take all of the signals. So let's define the context of the structure of where we are. And you have to maybe go to the daily chart to look at where we are trading, right? So we are trading after a humongous day that we have had to the upside. That was a capitulation bar. And also we could call this bar a momentum bar. So whenever momentum bar happens or capitulation bar happens, what we need to see next is a test. And the test either gonna be successful or it's gonna fail. So on the next day, which is this day right here, we are playing that testing day. So therefore, my bias is still going to be in the direction of the momentum. Even the intraday action right here, as we see, produced that, very substantial rally for the overnight action here. That rally was negated going into the US session and then into the first 30 minutes, an hour of the US session, and that defined the range for the day. And US session specifically defined the boundaries for the whole day. So we are kind of operating on the assumption that the price is going to pull up into those areas. And one of the trades, and both sides were available, to the downside and to the upside. I thought that the upside was more dynamic, still following the momentum from the previous day, following the momentum from the overnight. So I was thinking that we could use the bullish bias to have the trades that would have more dynamic type of entries. So let's go to this day first, and let's just figure out what has happened. So as I am waiting for the buy signals, I'm a little bit late on the first entry. So if I would be nitpicking my own trade here, this would be a much more appropriate entry. Again, I'm just limited in time, as I do a lot of other things during the day. So here's the point of entry. And again, the logic here was that we might hold into the end of the day to see some kind of daily bar that would look something like this. And that would be a really good test of the prior climactic momentum bar. This would be somewhat of the successful test, or at least the top information that would have upside buy behind it. So therefore, I'm leaving the trade on as it unfolds. And as it unfolds, I'm already kind of like anxious, that all of the profits are gone. And then once we have this rally right here that overcomes this high, the thinking was, okay, well, from the stop loss that I had here, I could actually move it a little bit higher to this point, and obviously, a late exit right here. The second trade was much better executed. Just thinking about that, first of all, we don't have a lot of time left. There is only 1 hour in the session, and we are definitely not doing this. We are not creating, this pull up. We're probably gonna finish more in the bearish territory, which will define that the test was not that successful and would put some pressure on the next day. So therefore, this one was a little bit better timed just for the entry. That's number one. And secondly, with the exit, on the first change of character bar, I'm just getting out, and that's it. That's all she wrote for this trade. I thought that this was a much, much perfect trade. And that was an adjustment that was made throughout the session, understanding, what kind of trade we should have had initially, and then just repeat of that trade again. Please note also, just analytically here, the expansion of the rally at the beginning and then the contraction of the rally, which suggests again that we are failing on the test, and that next day the bias is going to be more bearish than bullish. All right, well, let's come back to Franz. Franz, what do you think? How did these two trades go?
Okay, well, Rahman, first of all, the way I'd like to just take a second and talk about the way you analyze the whole context that you're going to operate within. You started off looking at momentum and saying to yourself, okay, well, I think I can see how this is going to evolve. There's going to be some sort of a test. And as that occurs, then you started saying, okay, well, what would that look like? What sort of market environment, even on an intraday basis, are we going to have, and how can I capitalize on that? So for day traders in the audience, go back and listen to his explanation of his just the whole rationale, the logic behind this, because it's, he's not just looking at the bars as they play out. He's thinking, okay, what's going to be kind of the causal different aspects that make this happen the way I think it's going to happen, and how can I capitalize on that? So that's the first thing. It was just tremendous analysis. The second thing that you talked about a little bit, which is not necessarily this trade, but it's just, if you're going to be a day trader, you're going to be sitting in front of the computer the whole time. And, maybe that's a possibility for some people. Maybe that's desirable for some people. And knowing how much you love the analysis and the trading, I know it's a big temptation, but sometimes, you know, life happens and you've got a lot of other balls in the air that you're trying to juggle. So, you know, sometimes that's gonna get in the way of, you know, these trades that you want to execute, even though you see them and you know what you should do. So, and that goes for all of us. But as far as trade number one, yeah, I think you already talked about where would be the ideal point of entry. It was there, and you saw it. You just weren't available for it. That's the issue right there. Your point of entry, exit, and you know, with this tape reading course that we're taking, you know, you see a couple bars like that, and the volume that's associated with them, and that, you know, that's giving you a pretty good indication that maybe you ought to be heading for the exits. So you had a different sort of scenario in your mind that you were expecting to play out, and maybe that, you know, created, you know, some sort of confirmation bias that just caused you not to see this. I don't know, but this is what happened. I think you did when you finally saw that last reversal bar at around 10:15 or so, and recognized what was happening there and moved your stop, and you know, that was probably the best way to extricate yourself from the position. But,
yeah, I'm thinking here now that you're talking about, like, you know, what was the best way to manage this trade, right? I mean, obviously, we've missed a very clear change of behavior. So Franz is just right on here with his comments about how the change of behavior happens, right? Look at the supply that is starting to come in. And it's not like I wasn't seeing this. I did. It's just that I was not acting on it, anticipating that we might have some kind of higher low and then more dynamic continuation maybe over the previous highs and just closing somewhere here. So that was kind of like the rationale behind this. But then, obviously, once we break like this, you know, and that shows a little bit of the climactic action. That shows some stop in action. And then that showed that, you know, deep spring, and then look at the recovery, right? So there is some demand behind it. I think, you know, just thinking about what Franz has said, was there a better exit for this trade? So now that I'm looking at this a little bit in the you know, retrospectively, this could have been another point of exit where we are in a bad situation. We're realizing that our game plan for the day is unfolding in a slightly different way. And then failure on what we thought maybe a local sign of strength would act actually as a good and exit point, or maybe this bar right here. And with that, we are somewhat at the break-even point, and we are not at a loss, even though the loss is still within the parameters of the risk that we have. So a very interesting trade. There are quite a few nuances here, and obviously, again, I would just say that was I available for this trade? Yes, I took it, so I was available. I think just the rationale of the testing was not necessarily there on the day that is diminishing or contracting in spread. It's better just to take the profits and just, you know, be confined with the trades like this. And I thought that the adjustment actually was made correctly here into the end of the session. And even though this swing was not as big, but here we are executing the trade exactly how it was supposed to be executed, exiting on, you know, more of the change of character, or at least appearance of the change of character. Here is another point of exit possible. One. All right. Well, Franz, what else? What other thoughts? And let's just go through the variants.
Okay. Well, to me, it is so cool to look at this 1 minute chart and kind of, in my mind, you know, on a daily basis or even a weekly basis, see exactly, almost exactly just in a smaller time frame, the same relationship between price and volume that we see at every time. It's just amazing. It really is.
Yeah, the concept work on any time frame with any instruments that have the price and volume relationship, right? So you see the same things unfolding. You see the same changes of behavior, changes of character, structure unfolding, phase analysis, trend analysis, and then again the changes of behavior. So absolutely great comment. Okay. Well, why don't we discuss, Franz, not the second trade, because this is easy. I would probably say that the variance here, is very high, so it's probably up to like 100% or something like this. I don't see anything like wrong with this, unless you could point to something else.
No, we'll give you a blue ribbon and we'll just put that in the drawer.
Sounds great. Yes. So let's not discuss this. Let's discuss the first trade, because this is where it's most interesting. So for the bias, what do you think?
I think you got the bias right, so I'd say yes.
Okay, yes. Timing could have been
timing,
a little bit.
Yeah, maybe 75-25.
Let's do 50-50 as we usually do that. Yeah. So this would be a little bit better bias. Okay, character.
The initial character, I'd say yes, but you were thinking that maybe a 50-50 on that one too.
Yeah. So let me just quickly explain. So were we expecting the move up? Yes. Were we expecting the initial rally to come to this point? Yes. Were we expecting maybe a somewhat of the laborious way after two momentum rallies, in the previous day in the overnight? Yes. So therefore it's yes. But just in the logic as to how the day should unfold definitely was different on the character, so we're saying 50-50. Point of entry, probably also 50-50, because could
point
have
of
been,
yeah, I'd say 50-50.
Yeah, because could have been improved a little bit. Stop loss, well, again, depending on the logic, if we're expecting some kind of pull up here into the end of the day, then original stop loss actually does make sense. But why don't we just say?
Well, I give you a yes on that. I mean, you did have it's always that initial stop loss that if you don't have it, that can kill you, and you put that on. So I'd say you get a yes on that. You're going to be harder on yourself than I am.
Yeah, I'm going to be hard on myself. I'm going to put 50-50 here, because just how it all unfolded. Okay, so no add-ons, and then the exit, definitely no, right?
Yeah.
So we have 1, 2, 3 out of 6, so 50% variance. And then, Franz, what would be your biggest comments about this trade?
My biggest comment would be mental flexibility. You had a certain, I kind of referred to confirmation bias earlier. You sort of had a certain, I think I can see here, you had thought this through so well and your logic was so excellent, but the market doesn't always completely follow our logic. So you just got to be
more flexible. Yeah. And also just on the analytical level, just thinking about, how I was dissecting the day before it happened and kind of creating the trade plan for that particular day. So, that mental flexibility should have analytically point to, two different scenarios, right? So I'm just going to put here scenarios, bullish and bearish. So we have to keep in mind both scenarios and then just see how the day is unfolding and act accordingly. And again, I mean, the second trade shows that flexibility, but the first trade actually, did not. So the first trade had to teach me in real time what was happening on that particular day. And definitely, this exit would have been much more preferable and manageable than the one that I took, after this low. All right, excellent. This is a great analysis, Franz. Let's go to the second trade. So what happens on the second trade? So even though this trade is kind of reminiscent of what we had into the end of the first session, they are completely two different trades. What do I mean by this? Well, the first one is still in the direction of the momentum that precedes that trade, right? So we're seeing how momentum starts to diminish, but it doesn't really matter for taking that particular intraday trade, because we're still within the context of, having a major bullish momentum, bullish bias, and we just playing the bullish bias, from different angles. Now, on this day, where we define the bias to the downside, so the bias has changed from being bullish to now being bearish. And again, one might say, well, why don't you trade this whole thing? Isn't it better? Well, a very simple answer. I was just not available. I was just in the meetings throughout the whole morning. So when I came back, and obviously I looked through, even at the during the meetings, I look at the market. But if I'm not available, I'm not going to stress, with putting on the trades like this.
Right.
So when I came back, what I saw was very interesting pattern, and I thought I'm just going to play the trade into the end of the day. So once we have stopped here at the climactic action and we've produced some kind of structure, what caught my eye is this action first. So you kind of see that the spread is diminishing, and therefore volatility is diminishing. And that is suggestive that we probably, after the climactic action, is close to experiencing, some kind of phase C type of action. I really like this bar. It just basically screamed at me that this is the local climactic action. And if it is reversed, then we're going to go up. It did. There was another trade right here, but again, I was not available for that particular trade. And that rally showed a sign of strength, and then we are in a little bit deeper backing up action. Supply is not increasing significantly. The spread texture suggests that it is still bullish. So therefore, in this area right here, when I finally became available, I'm just looking for the reversal. And my targets, because we're going into the end of the session, is just anything higher than this, where we could potentially stop, reverse, and that would be the exit. So a point of entry, which was a breakout point of entry, gets us a little bit earlier. We have a 2-minute reaction, and then we're just going up. There is really nothing damaging on the way up. Even this reaction right here does not have a lot of volume signature behind it. So, and the resurrection on the next bar is almost immediate with the signs of the demand, suggesting continuation and suggesting that we're going to overcome this high right here. And then once we do, there's a little bit of the climactic action here with the increased volume signature, which is consistent. So we're thinking that we're close to the climactic action, and we're going into, almost the end of the session. And again, I'm feeling just pressure from having other things to do during the trading session. And I'm just getting out, and I'm getting out on the stopping action, where before, if we stop, it had some upslope, and it's just small stopping actions. I don't want to continue, so I'm just exiting, and it just proves to be a really good exit right there. So even though, just coming back, and I think this is a very important distinction here, these two trades are different in nature. This is in line with current bias. This one is a counter trade to current bias. And that's the biggest difference. So with the counter trades, you're always going to be thinking that the profit targets are going to be much, much shorter and smaller, and you have to play it like that. All right, Franz, let's go through your thoughts and remarks about this trade, probably kind of like, also as the previous day's trade, and then let's go through the post-analysis.
Wow, Roman, this was great logic. Recognizing that it's counter trend and capitalizing on recognizing that there's still going to be some sort of a trading range developing and taking advantage of it is, to me, this looks like a great execution of a really good trade, even though it didn't go very far, but it went as far as it was going to go, and you were there. So, great job.
Well, thank you. And so then let's just go through the post-analysis. And this one is going to be easy. So bias,
yep.
Yes. Timing, yes.
Yep.
Character, yes.
Yep.
Point of entry, yes. Stop loss, yes. So the stop loss was here. And it's not that I was moving the stop loss, because the movement of the swing happened kind of like in a singular move. There were no significant reactions. Like this reaction is different than what we've seen here. So I did not go through much larger reaction. This was just one singular swing. There was no add-ons. Wasn't really anticipating that I would hold on longer, and therefore probably just non-existent add-ons, and then the exit. Yes, so wow, 100% variance. In my comments, for this particular trade, Franz, I probably would just say, like, be available for just generally for other trades. And as we're recording this and I'm looking at the market again, I'm in this situation where I'm doing something. I'm seeing setups.
Yeah.
And maybe I'm just going to bring the screen right now. And then, I'm just not doing this because I'm doing something else. And then the second comment that I had here is, oh boy, I forgot. Sorry about this. Okay, Franz, any other comments, lessons, and that we could convert into the rule?
Just, situational awareness. It's a counter trend situation, but it's still going to create a trading range. It's still going to create opportunities. But yeah, I feel your pain with seeing that big downswing that had developed while you were unavailable. So
yeah, and the point, I thought that the greatest point of entry was somewhere here, not even like here or here, because we still don't have a full confirmation of the bias to the downside, but this shows some weakness, and this acts as the last point of supply. So your point of entry is somewhere around the up thrust action here, or the break to the downside, and maybe even somewhere here. So this would have been, a very good trade. And by the way, if am I correct, just thinking about the yesterday's price action, SPX probably would be a better instrument to trade, just because of the comparative analysis. But still, this is a very, very nice take, from the trade that is in line with the bias at that moment. But again, you got to be available. You got to take the trade because you are there, and not just because it happens. All right. Well, with this, let me show you really quickly, as as we're recording this, and I'm looking at the market action. So definitely a lot of the overnight movement to the downside. So you really have to notice those things, because whenever volatility expands in the overnight action relative to the US action, and we could see this from the number of points that we are losing here overnight, we're also seeing that overall volume signature is somewhat higher than on the previous overnight action. So that means that we're going to have somewhat of the volatile session going into today. And usually, you know, if there is some kind of gap, obviously we want to cover that, we want to close that. So let's quickly just look. And as we were recording, this was the trade to take right here. This was a point of entry. I was thinking about that. But, you know, when I saw this, we already were somewhere here. You know, it's a little bit too late to do that. And, you know, if you're working and doing something else, obviously it's much, much harder. But again, you know, something like this, where we are going in with an idea, again, of the counter trade, and then looking at the texture of how the price goes down into which zone with what supply level, then this makes a lot of sense. And this reaction seems to be non-threatening and much better than what we've seen before. So therefore, this suggests, you know, a continuation of this low. Could have been an add-on. Probably would be thinking about, you know, protecting this area a little bit more in terms of, you know, moving the stop loss, as we might just react off this level. And that would be the trade. You know, 2 trades here, and then 1 trade in line with the overall bias right now. So 3 trades so far for this day. And you could see how, you know, when you get in line with all of this Wyckoff logic, intraday trading actually becomes, you know, a little bit more open. It doesn't mean that it's easier. No, you could see how I'm making mistakes there, but it's definitely a little bit easier to think in terms of the structure, in terms of the tape reading techniques, in terms of the logic of how the day unfolds, and so on and so forth. All right, well, with that, Franz, as usual, thank you so much for being here, and thank you for helping me out to improve my trading. You know, it's always great to receive your comments on the YouTube channel, or if you're emailing us. So thank you for all of your support, guys, and we are happy to hear in your feedback that these videos are helping you out to think about proper trading, to think about the adjustments that you could make with your trading. So hopefully this is another episode that is of value. Franz, final thoughts?
Well, great comments, Ramon, and that last little vignette that you showed was a live situation. Please, again, everybody, read the disclaimer. This is for educational purposes only. So, but it's great education. So good trading, everybody.
Thank you, and bye-bye.